How's it going, everybody? It's your boy Satoshi coming right back at you for another video where today we're going to be talking about what is a bull market. How did it come up? How many bull markets do we have in the past 14, 15, or 50 years, all the way since 1932 in this pretty cool article. And we're also going to go have a glimpse at Bitcoin, the S&P 500, as we always like to take a look at it, and some news that's going to be coming up in the coming period, so we can see where 2023 is going to end and where could 2024 begin when it comes to trading, when it comes to investing, and when it comes to being smart while looking at the market. So without further ado, let's get straight into the video. So what is a bull market, right? This is something that you may have wondered for, several years or since you've started trading, and you've always known kind of what it means. It basically means that the market is moving up, right? We are all aware of that. But how did bull markets actually come to be? Where did the term bull come from, and how long do they typically last? Like for the Ice Age, for example, you have interglacial periods, you have glacial periods. What is happening between the bull run? What is happening whilst the bull run is going on? That's the point of today's video. And as we can see right now on the S&P 500, I did chuck a little, so to speak, prediction last time we made this video. We do have a few very important zones that the prices were respecting, right, in the past months. But currently, we do seem to be breaking above the $4,000 mark with a very strong bullish momentum where we are, for the first time, according to Bloomberg and a few other news articles, actually entering a bull run once again on the S&P 500 with a 20% recorded growth back since, the beginning of 2023, right? So this is around 2nd of January. So the price was around 3.7K. Right now, it's around 4.3K. So it is quite a nice increase. So what happened and why is this called a little bullish momentum? What is a bull run? Let's get back into the article, right? A bull market, by definition, is a condition where a market that, just simply is moving in a direction tends to go up, right? So that's pretty much a bull run. So if the market is going up, it's a bull market. If the market is going down, it's a bear market. So it's called a higher trend. It's called an uptrend. It's called higher highs and higher lows. And you can always check it out on the chart where you can pretty much see that once we're creating higher highs and higher lows, we are pretty much in a bull market. Now, this could be on the daily time frame, but a bull market could happen, literally during one single day. So we can say that today was quite a bullish day because the market did move up. But what we tend to do is, take a look at the daily or weekly time frames if we want to see, the widest amount of price action actually contributed into this chart right here, because that's the most amount of money that we are actually talking about, right? So usually bull markets are applied to benchmark indexes like the Dow Jones Industrial Average, S&P 500, or index of the top 500 stocks in the United States and the Nasdaq, right? It generalizes the stock market to basically rising or falling, right? We have a bull market or we have a bear market. Now, criteria for the bull market actually starts with a continuous uptrend in equity index prices, while the economy is also exhibiting signs of growth. So pretty much what happens is, once the economy is moving well, there is more money on the side for everybody. There's more income on the side for people to actually spend in investing, to spend in the supermarket, to consume, to invest in stocks, bonds, real estate, or whatnot. And people just simply spend more in a growing economy, which contributes to rising prices and therefore a bull market. And what we've seen in the past is a huge bull market happening very recently. But at the same time, a bull market is not always good because it does cause an increase in price levels. And due to this increase in price levels, we basically have the terminology that is also known as inflation, right? And these are some of the signs that are telling us the bull market is actually a market that's moving up, and the criteria that actually come up to it. And it's the economy, right? First of all, it's employment, it's GDP, it's optimism in the market, where if the market is optimistic, everyone's going to keep spending more, expecting more money to hit their wallet at some point in the future. And we have more capital, which basically induces more growth, more investing, and more on the aggregate demand curve, where you have the equation that includes both government spending, investing, consumption, and net exports when determining a country's GDP or growth level, right? So some of the economic implications of a bull market itself are, it basically means that the underlying economy tends to be improving as, the GDP actually increases. And, unemployment actually falls. So if the GDP is increasing and unemployment is falling, we tend to see a market that is increasing in value, hence also known as a bull market, right? Wages also tend to rise in a bull market, and companies continuing hiring as they finance growth with low interest rate loans and debt. So this is an expansionary period where we have inflation coming up as well, where we have all of this stuff. And once inflation hits a level that is a little bit higher, we do tend to see deflationary measures being placed upon by the economy, or by the Federal Reserve, or by the central banking regulative system that is there to simply control price levels and keep everything in sort of a like a scale, right? Because economics is not that simple. Once you improve on one sector, the other sector is always going to suffer a little bit. And the point is, to try and be like the top economies in the world and try to balance this stuff out, right? History of the bull markets. Okay, there have been 14 of them since June 1932. The average length of a bull market is 3.8 years, with the longest bull market being the 11-year run from 2009 to 2020, just before the pandemic collapsed the market. So, as we can see right here, we did have the Great Depression back before 1930s, and then we had a big bull market. Then we had a this might have been the Great Depression. I'm not that sure. Then we had a big bear market. Then we had a bull market once again. Bear market, huge bull market after the Second World War, which makes perfect sense. After that, just a period of stagnation pretty much. So bull bear, whatever, Cold War, whatever was happening back then. Then we had a nice bull market in the 90s, right in the 80s, then in the 90s, and then we had the dot-com bubble up until 2000, which burst, and then we entered a little bit of a bear market as well. And then we had a few others coming up after the 2008 crisis, and the recent one has been quite interesting, right? just so to speak, right? So this is the October 1990 bull market, for example, where you can see exactly for how many trading days it went on for, and the percentage gain around 400%, which is crazy, right? But I mean, we've seen crazier stuff with crypto. We've seen a lot of these bull markets recently. But, the average length or gain of a bull market is 112%. And the average length of a bull market is 9.6 months. So anything above that, and you should expect prices to start falling at some point. Now, something like this would be a correction in the market. Something like this would be a bear market, since you have consistent lower highs and lower lows. And something like this would be a crash, right? So we can, display all of these things on the chart, right, itself. We're only focusing on the US 500 as of today. Once we see this part, for example, this is a crash, right? This is a market trending down. We could say a bear market, and this is a market trending up, or we could say a bull market, right? So quite interesting. Now we have bubbles. We have the stock bubble of 1929 that burst, dot-com bubble of 2000 that burst, 2017 Bitcoin bubble that burst as well. But Bitcoin did come back, and it might burst again, right? But currently we are quite chill, and we also, when it comes to cryptocurrencies, we're following the prices of the stock market. So it's quite correlated when it comes to crypto and stocks and all of this stuff. So it's actually quite interesting to know as well. Now, trading in a bull market, right, is quite easy, because the trend is your friend. You should always trade with the trend. Never try to find the top of the market. Try to find, instead of looking for the very top and the very bottom, try to dollar cost average near the bottom, and, sell off portions after portions near the top, so that you have the best possible average buying price and the best possible average selling price, while minimizing your risk at the same time. So a lot of this stuff right here is something that I'm going to leave in the link down in the description below. If you want to short the rip, playing against the trend, playing with the trend or whatever, you could. But, everyone sees these trend lines. It's kind of dangerous to trade that. You need to pay attention. And also, you need to know a little bit about macroeconomics and fundamentals of the stock market, where, I might discuss this in another video later on, but the S&P is divided into 11 sectors, as you can see, with tech being the largest one, because, that's basically what the S&P is all about. You got to be aware of the market leaders always when investing, because what the market leaders do, the market tends to follow. And, usually you get this information too late, but in the case that you somehow realize that something's going to happen if you combine both technicals and fundamentals on the chart and the macroeconomic situation. And if you follow news, for example, right, Yahoo Finance, Bloomberg, Reuters, and all these sources. And if you check out Forex Factory on the regular, where you can see exactly what's happening with CPI news, unemployment, press conferences, and all of this other stuff, you will be a good trader. So that's it for today's video. I hope you all enjoyed it. Make sure to drop a like, subscribe to the channel, comment down below with your favorite thoughts and opinions. And lastly, I'm not a financial advisor, and you should do your own due diligence before investing into anything in the blockchain, crypto, or the stock market world. So thanks for watching, and I'll see you all in the next video.